Now, I'm wondering, what do you think in terms of what can you tell us about the reliability of Tether? So, obviously, I'm sure everybody listening must have heard a lot said at certain points that Tether is a Ponzi, Tether is going to fall apart. Realistically, the impression of somebody who's not involved in this, who has no horse in this race, is, I mean, you could run something like Tether properly and you could run it like a Ponzi. Like, there's nothing inherent about the structure of how it's done that makes it good or bad. I think what you guys are doing is essentially a money market mutual fund. You hold assets and then you sell digital claims on those assets. And so, if you are well capitalized, backing up your backing up your digital tether, then there is no problem. But if you are, if you over leverage, then it could be a problem. And I think it was absolutely stunning for me to hear you say on Twitter that you guys redeemed, I think it was $7 billion in 24 hours last month when there was a run on stablecoins because of the collapse of Luna USD. Was that correct?
So 7 billion in 48 hours.
48 hours, okay. Yeah, which is incredible. And I think you make a very, very good point, which is what would happen to any kind of regular financial institution if they had to redeem $7 billion in cash in 24 hours? I mean, have you looked into this? Is there some comparison about, can JP Morgan deliver $7 billion in cash if you asked them for it today?
So the $7 billion is a really big number, an astonishing number. Put in context, was representing 10% of our reserves. So we did a little bit of due diligence and the history of bank runs. And there was in 2008, so in the recent history of the traditional financial world, in 2008, there was this bank called Washington Mutual, if I'm not wrong. They basically had a bank run for around between 10 and 12% of their assets in 10 days, and they went bankrupt. They couldn't cope with the demand, and they went bankrupt. So, and that is the biggest case of a bank run in the recent history. So, on the other side, you have Tether that processed 48 hours, processed 7 billion. That was 10% of our assets. And in 1 month, we processed $19 billion $16 billion redemption. That was 19% of our total assets. And we can keep going, right? So so the majority, although people think that actually everything went to our competitors, if you look at it, if you look at the numbers, the majority went out to the crypto industry because everyone is scared, right? There is money. So there are different components to this. So everyone is scared. All the big holders and the big funds are, waiting on the sidelines. And since the interest rates on the dollar went up quite a lot, it makes more sense to keep the money into your bank account that you might get 30% per year rather than keeping in Tether or in the crypto industry on the sideline just to do nothing, right? Because if you keep dollars on an exchange, even just not even Tether, but dollar on an exchange, they will not get you anything, right? They will not generate a yield for you unless so the only thing you can do is to take out the dollars on your bank account, invest in US treasuries and so on. So that happened, right? So it's if you see the numbers, the majority of this money flew into outside of the crypto industry. It might re-enter at some point. So I'm not saying that it's lost forever, but it's definitely capital that is not being buying power now. So, but when I get asked what happened with Tether and those redemptions, I see it as a positive way, as a positive factor. So we have attestations that are in this industry standard. All the stable coins have attestations, not audits, and but attestations are third-party companies that are look at the numbers and they say, well, yes, okay, you are fully backed, but also banks have audits and they have full audits, and yet there are not many banks that can resist to a 34% imminent redemption, even more so at 10%, or even more so at 19% in 1 month. So for me, I could passed from the fact that I could start saying, instead of saying, yes, look, we have attestation. And now I can say, look, guys, we are basically the only stablecoin, but also most probably the only institution that has been tested with fire with 19% redemption. So there is no one who can claim that. So it's pretty exciting if you think about it, right? And the job of a stablecoin is to receive money and issue a token. And on the other side, receive the token and give back the money to people. So we don't see it as a defeat, right? So also you have to know that the Tether business model, and Tether, the reason why Tether exists is not, to be the dollar for the banks, to be the dollar for Wall Street. I believe personally that Wall Street has already the best banking rails in the world, right? It's what we said before. Tether, the reason to exist of Tether is to fulfill the need of dollars in the emerging markets and in developing countries. So those people that cannot get easily access to the dollar in any other way. So so for me, what happened, it was definitely interesting to see, was a positive proof that Tether has, and it's really hard to replicate from anyone else, as history teaches us. So, I see the glass half full.